Hello, and welcome back to the channel. I'm AlgaBot, your guide to understanding automated trading systems for MetaTrader 5. Today we're taking a close, educational look at a strategy called tail pivot reversal. This is a pure price action approach, which means it reads nothing but raw candles, no moving averages, no oscillators, no indicators of any kind. In the next few minutes you'll learn how it spots a rejection candle at a fresh extreme, how it waits for confirmation before committing, and how it places its stop and target. This is educational information only, never financial advice. Let's begin. Let's start with the big picture. Tail pivot reversal is built on a single, very old idea in price action. When a market pushes hard into a new local high or a new local low and is then immediately rejected, it often prints a candle with a long tail, sometimes called a wick, on the extreme side, and a small body that closes back away from that extreme. Traders call this a pin bar or a rejection bar. That tail is the visible footprint of an auction that ran out of buyers at a high or ran out of sellers at a low. What makes this particular strategy distinct is that it does not fade that tail blindly on the close. Many beginners see a rejection candle and immediately take the opposite position, only to watch price keep going. Instead, this approach demands confirmation. It arms a pending stop order at the opposite body end of the rejection bar, and it only becomes active if the very next candle actually trades back through that level, showing follow-through in the new direction. Everything here is computed from raw candle geometry, the highs, the lows, the opens, the closes, and the lengths of the wicks. There are no moving averages, no oscillators, no average true range, nothing layered on top of the chart. That makes the logic transparent and easy to study. This style of system is most relevant for traders who are interested in structural, confirmation-based reversals, and who want to understand how a rules-based engine translates a visual candlestick pattern into precise, repeatable orders. It can be applied across different symbols and time frames, though every market behaves differently. Remember, as with any strategy, trading involves real risk, and losing trades are a normal part of the process. Nothing here is a promise of any outcome. Our goal today is simply to understand the mechanics clearly and honestly. Now let's walk through exactly how the strategy thinks, step by step. The engine only acts when a brand new bar opens. At that moment, it first cancels any pending order it placed on the previous bar that never became active. This is important. A signal is considered valid for exactly one bar. If the market did not confirm within that single bar, the setup is treated as stale and removed, so an old signal never lingers in the background. Next, the engine checks whether a position is already open under its identifier. If one is, it simply lets the existing stop-loss and take-profit manage that trade and does nothing more. It never stacks a second position on top of the first. If the path is clear, it examines the candle that just closed, the candidate rejection bar. It measures the full range from high to low, the size of the body, and the length of the upper and lower wicks. The first filter is the body. The body must be small relative to the range, by default no more than 40% of it. This ensures we are looking at a candle dominated by a tail, not a strong directional candle. Then it tests the two scenarios. For a bullish setup, the lower wick must dominate, by default at least 55% of the range. The close must finish in the upper half of the candle, and the low must be a fresh local low, meaning no candle in the lookback window behind it traded lower. When all of that aligns, the engine arms a buy stop just above the bar's high. The stop loss is placed just below the rejected low, and the target is set at a configurable reward-to-risk multiple beyond the entry. The bearish setup is the mirror image. The upper wick must dominate, the close must finish in the lower half, and the high must be a fresh local high. The engine then arms a sell stop just below the bar's low, with the protective stop just above the rejected high, and a target a reward-to-risk multiple below the entry. The pending order activates only if the next bar reaches that level, providing the confirmation the strategy insists on. Let's read through the code you see on screen, just as it appears in MetaEditor. At the top are the input parameters, the dials you can adjust without touching the logic. Lookback sets how many bars behind the rejection candle must be checked to confirm a genuinely fresh extreme. A larger value demands a more significant high or low. TailRatio is the heart of the pattern. It says the dominant wick must be at least this fraction of the candle's full range. here 55%, so raising it makes the engine pickier about how long the tail must be. Max body PCT caps how large the body can be relative to the range, keeping the candle tail dominated rather than strongly directional. RewardRisk sets the target distance as a multiple of the measured risk. Trigger buffer PCT and stop buffer PCT add small cushions, one beyond the bar for the entry and one beyond the tail for the protective stop. Now look at the signal block. The Boolean bullish tail becomes true only when three things agree at once. Fresh low confirms the low is a new local extreme. The lower wick is at least the tail ratio of the range, and the close finished at or above the midpoint of the candle. When that is satisfied, the engine computes the entry level as the bar's high plus the trigger buffer. The stop loss sits at the bar's low minus the stop buffer. It then measures risk as the distance between entry and stop, and, provided that risk is positive, sets the take profit at the entry plus the reward to risk multiple of that risk. Finally, it places a buy stop order at that entry, with the stop and target attached. The bearish path, not shown here, mirrors this logic in the opposite direction. Let's watch the logic play out on this illustration. On the left, price is drifting lower, candle by candle, pressing into a new local low. Then a single candle stretches down and prints a long lower tail, dipping to the green support line before snapping back to close near its top. That is our bullish rejection bar. Notice the body is small and the lower wick dominates, exactly what the rules require, and the low is fresh, lower than anything in the recent window. Because of that, the engine arms a buy stop just above the candle's high. On the next bar, price reclaims that level, the order becomes active, and the buy entry marker appears. From there, price works its way up, and when it reaches the take profit level, a reward to risk multiple above the entry, the long trade closes at its target. Now the mirror image unfolds on the right. Price keeps climbing into a new local high and a candle thrusts upward, painting a long upper tail that tags the red resistance line before closing back down in its lower half. That is the bearish rejection bar, a fresh high being firmly rejected. The engine arms a sell stop just below that candle's low. On the following bar, price slips beneath it, the order becomes active, and the sell entry marker appears. Price then rolls over and works lower until it reaches the take profit level below the entry, closing the short at its target. Two clean, confirmation-based reversals, one long and one short, each derived purely from candle structure. Of course, real markets do not always follow through like this, and many setups end in a loss when confirmation fails. This is an educational illustration only. So that's the tail pivot reversal strategy. We covered how it reads pure candle geometry to find a long rejection tail at a fresh high or low, how it insists on confirmation through a pending stop order before committing, and how it derives its stop loss from the rejected extreme and its target from a reward to risk multiple. Everything came from raw price, with no indicators involved. Remember, this video is educational content only, and it is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like me to explore next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.